So when I first started out doing my gig work, I had a hard time figuring out which one I should use. Standard mileage rate, or would it have just been a better idea to calculate all of my annual car expenses?
Before I start, please keep in mind that I am not a tax attorney or an accountant, so please be aware that the advice I'm sharing with you today is based on my own personal experience and understanding of how to prepare for tax season as a part-time gig worker. So I advise you to make sure you consult with your tax preparer, tax attorney, tax accountant, or a financial advisor that you trust to make sure that what you are doing is the best for your small business or side hustle gig. And that advice is always well worth whatever fee is involved with doing so, because while free advice provided on YouTube can give you clarity, a double check from someone who specializes in this field will probably save you more money in the long run. So you do want to take the time to get this correct the first time around.
Hey friends, welcome back to the channel. As a spinoff to this last video, where the focus was more so on using the standard mileage rate for your taxable deductions, today I'm going to focus on how to calculate all of your car expenses to help you figure out which one gives you the greatest return for your taxable deductions, as well as figuring out the pros and cons of each one and when it's best to use one over the other. If you're new here, hi, my name is Shanita. I make content around the strategies and tools to help you amp up your side hustle game, become more productive, as well as pay off your student loan debt faster. So if you're interested in any of these topics, consider subscribing. So let's start off with calculating the total of all of your annual car expenses. I'm going to use myself as an example here, and I'm going to stick with using my 2019 expenses as an example for demonstration purposes of this video. So the first part is depreciation. How do you calculate depreciation? Well, I don't really know that well either, but I went online to see if I could try to find any type of calculator that can calculate the depreciation of my car annually. I'll leave a link below to the calculator that I am using in this video. So the first part of this depreciation calculator that I found is asking for the asset cost of the car. I'm assuming that this means how much I paid for the vehicle. So when I bought my car, I bought it as a certified pre-owned vehicle that was 2 years old at the time of purchase, and it had about 38,000 miles on it. So the total purchase came to $10,086.48. I then applied a $1,000 cash deposit on that, which brought my total down to $9,086.48. But for this purpose, I'm going to just put in the actual sticker price of the car. So the actual sticker price of the car came to $10,086.48. So I'm going to put that in the field of asset cost. What I like about this calculator is that it gives you descriptions of each of the fields so that you can decide how to best populate these fields. So for salvage value, the value of the asset at the end of its use life, also known as residual value or scrap value. I interpret this to mean a trade-in value. So when I am completely done using this vehicle, what can I actually get back in return of cash value to apply it to a newer car? So for that, I'm gonna go over to Kelley Blue Book, where I can then get the estimated value of what my car would be worth if I were to trade it in. So I'm going to click on Get Kelley Blue Book Values here on the right-hand side. I'm going to go ahead and answer all these questions about the make and model of my vehicle. And boom, Kelley Blue Book is estimating that the total trade-in value of my car would be about $4,389 based on the current condition that I stated it is in now. So now I'm putting in the salvage value of $4,389, and now I'm going to enter in the useful life in years. So it says here the useful life is the expected time that the asset will be productive for its expected purpose. So I primarily use this car that I have for my gig work to get to and from the customer's residence to the restaurant in a certain amount of time daily. So I am basing the use life of my car based on that type of usage. Okay, placed in service. Select the month and enter the year the asset started being used for its intended purpose. So I interpret this to mean the month and year I took the car off the lot for purchase and ownership. The next section is convention. Convention suggests that you choose a full month, mid-year, or mid-quarter convention. If you don't know, it suggests that you keep it at the common full month. So that's what I'm going to go ahead and do. I'm going to have it round to the nearest dollar, and then it says calculate depreciation expense only, or you can select. So you have two options for calculating this depreciation. You can look at either just the expense only, or you can look at the full schedule. If you select expenses only, it'll just show you the depreciation expenses. If you want to see all the calculations, then you can click on full schedule and it'll show you a total of all the different expenses year to year. Based on this depreciation calculator, it says that on average, the depreciation expense of my vehicle is about $712.19. So that is what I'm going to go ahead and consider when factoring in the depreciation costs of my vehicle. The next item you would calculate in terms of evaluating your total annual car expenses would be your monthly lease payments if you lease a vehicle. As I said earlier, I did not lease my car, I purchased it. And while I did have monthly car payments, under the guidelines of calculating your annual total car expenses, you're not allowed to include your monthly payments. However, you are allowed to deduct the interest accrued on your car payments. But for the purposes of transparency, I will include how much my car payments were at the time. But at the time, my car payments came to a total of $155.37. In order to pay it off early, I pretty much did the exact same thing that I'm doing currently with my student loans, which was attacking it and putting as much as I could with the money that I was earning from my gig work towards my car payment until it was completely paid off. The next item after that is car repair or consistent scheduled maintenance and or new tires or tire repair. The total cost for 2019 that I have calculated here from all of my service appointment statements came to a total of $701.15. Monthly parking fees, toll booths, and street parking fees. The total amount of that came to, wow, $504. Now for gas, if you're anything like me, it's very hard to keep up with all the receipts from the gas tank. So I'm doing an estimate of how much I typically spend per week on gas while doing my gig work. And that estimates around $30 per week times 4 weeks in a month. And that would equal about $120 for the month spent on gas. And if you were to times $120 per month times 12 calendar months, that would equal $1,440 for the year spent on gas on average. It's important that you keep the receipts of all these things so that if you do get audited, you have proof and you're not guessing like I am. My car insurance stays pretty much between $212 a month. So 212 times 12 calendar months equals $2,544 annually. Registration. Vehicle registration renewal came to $76.25 plus the cost of the state safety emissions test, which was $25.50, and that came to a total of $101.75 for the year. Now, as I mentioned before, while I was unable to deduct my monthly car payments, I was able to deduct my interest accrued from making my car payments. When I first started making payments to the car financing company, my statements used to look like this, where they would put the principal payments, then they would include the interest payment that I made, and then they would tell me what the ending balance was. At some point in time, they then changed that to where they were only telling me the amount of money that I paid ahead instead of how much of the payment that I made was going towards the interest. Well, that's really important because you need that information when you go to start filing your taxes and you want to decide whether or not you want to use a standard mileage rate or your total car expenses for the year. If they stopped including the interest payments on your statements, then you would have to call them up and request that they send you statement or explanation of your payments and how they were being allocated and how much interest you paid on your car payment at that time. So if we were to add up all of these expenses, the total expenses that I would be able to deduct instead of using the standard mileage rate, it would total $7,621.02. But when I used the Stride app, the deductible mileage was 16,800.86 miles. Amount for that deductible mileage came to $9,764.22. So just based on the deductible mileage and not even including any of the other expenses, I still made out better by using the standard mileage rate. If you were to also add in all of these supplies and other expenses, the total deduction for that came to $11,743.17. So let's talk about the pros and cons of using the standard mileage rate versus using the total car expenses. The pros of using the standard mileage rate, it really is the easiest option for gig workers who perform some type of delivery service or transportation service. Because as you can see, I had all these different papers and I had to remember the total of gas because I didn't have my receipts and things like that. It really is more easier to use for people who tend to do delivery work or transportation services and they just don't have the access to keep everything in files. The other added benefit of using the standard mileage rate is that you can be able to switch back and forth between using the standard mileage rate or using the total of your car expenses for the year. But the caveat is that you had to have started off using the standard mileage rate when you first started doing your gig work. So for example, if you started off filing your taxes, doing your gig work by just calculating all of your car expenses, you can't then go back and start using the standard mileage rate. Unfortunately, it doesn't work that way. However, if you started off doing your gig work and you started filing your taxes using the standard mileage rate, you do have the ability of deciding on 1 year you want to use a standard mileage rate, and then on the next year you prefer to just use all of your annual expenses for your car as it relates to your gig work. Now the con to using the standard mileage rate is that it fluctuates from year to year. So while 1 year you may have really made out really well with using the standard mileage rate, the next year it may not be that way. There are some times where you may have very high expenses that you want to deduct, but they couldn't be factored into the standard mileage rate because you're not allowed to deduct your car expenses in addition to your standard mileage rate. Your standard mileage rate is already buffering in the cost of wear and tear on your vehicle. So for example, if you got 4 tires put on all at once, that's a pretty hefty expense, but you wouldn't be able to factor that in on your tax return if you use the standard mileage rate. Be sure to give this video a thumbs up if you found value in this video. So the pros of using your total car expenses for the given year is that you can see your total in real time. When you keep an accurate record of all of your expenses for the given year, it may be encouraging to you to see all the money that you're able to then factor in towards your taxable deductions. Now the con of using the total of all your annual car expenses for your taxable deductions is that you're not allowed to go back and switch to using the standard mileage rate. Another con to using this, it requires more diligence on your part to keep an accurate record of all of your car expenses. So when is it best to use one over the other? If your gig work requires that you utilize your car a lot and you're racking up a lot of mileage on your car, it's probably best for you to use a standard mileage rate. So there's lots of other forms of gig work, right? You might be a personal stylist, a hairstylist, or you might be doing contract work with other companies, and therefore you're not really racking up a ton of mileage like you would if you were delivering. You might be better off totaling up all of your annual car expenses as it relates to the type of gig work that you are performing. So for example, if you're driving a luxury vehicle and its parts are just more expensive to replace or maintain, it might be beneficial to use the total car expenses rather than the standard mileage rate if you're not using it that often. Because overall, it just wouldn't make a whole lot of sense to run up the mileage on a luxury vehicle doing something like food delivery services when the cost of repairing that vehicle is a lot higher than the average vehicle on the market. So it's really important to keep in mind that the standard mileage rate is based on the average car cost expenses for that given year. The key word here is standard. Standard meaning average. The next thing to assess is how did you finance the car to begin with? I'll leave a link below to the IRS webpage that talks about lease car expenses as it relates to your taxable deductions. However, if you don't own a car and never owned a car, and you might be watching this video because you are considering purchasing a car for the sole purpose of doing gig work or developing a side hustle, then I have left something in the description box for you too. In there is a very insightful and useful video from the NerdWallet's website on calculating the cost of owning a car by year. If you are curious to how much I make on average monthly as it relates to my gig work, click the playlist here. And to subscribe to this channel, click here. Until next time, bye.